How's it going? My name's Rico. I'm a realtor with EXP. Shola and I just completed the home ownership webinar for Black professionals, and we thought it best to edit out the introductions as well as the Q&A at the end, just to preserve everyone's confidentiality. Now, of course, if you have questions, we encourage you to schedule a consultation with us. We will have our QR links for our calendars at the end.
All right. So, some common mistakes. Did you know that people planning to buy a home ask themselves these questions? Am I even ready to buy a home right now? And this type of question, some people are actually ready, but they are not aware that they are ready to buy a home. They sometimes try to figure out on their own how much they can afford. And there's this pre-approval that everybody talks about. They're wondering what pre-approval is. There are programs out there that can help them with down payments. And why does everything feel like they're not understanding the culture, the system, especially when you are an immigrant here? And even when you're not, if it's your first time trying to buy a home, it might be a difficult process for you to navigate. You're wondering if there are hidden costs, and this may prevent you from taking the next step because you feel like you don't want to make a mistake. Are there hidden costs? It's a big deal trying to buy a home. And yes, it is a big deal. But when you work with a professional, these are things that are being addressed with you. You want to know if you're overpaying or making the wrong decision in a competitive market, as we have in Vancouver and British Columbia at large, actually. Yeah, next slide, please. So our goal today is to guide you through the process of qualifying for a loan to make it as seamless as possible for you. And we're going to try as much as possible to break down technical languages and use languages that you will understand so that it will, after this webinar, you have a good, sound understanding of the best financing options for you. And hopefully you'll feel more confident in addressing your goal of becoming a homeowner. You're on mute. You're muted.
Hear me? Here we go. All right,
Yeah.
you can hear me now?
Yeah.
Beautiful. So I'm a realtor with EXP, and I came into real estate mainly because I found there are many people in my circle whom were high earners, however, were not homeowners. And so I put myself in a position where I wanted to help as many people as possible on their home ownership journey, right? And I found a lot of people in my circle telling themselves that, they could never afford. So I want to provide people the tools and the knowledge that they need in order to, of course, take advantage of today's market, whether that be a first-time buyer, a first-time seller, or an experienced investor, right? Really, what it comes down to is having the systems in place to help you accomplish your goals.
And my name is Sola Fagbamiye, your humble co-host. I'm a mortgage broker, licensed mortgage broker, and I have been doing this for over 10 years. I have helped hundreds of families to secure their home, to fulfill their home ownership goal. I have a background in finance, so I'm able to come up with good strategies. When we assess your financial situation, trust me, I come up with the best strategies to help you navigate the system and become a homeowner sooner than later. And we make the process very seamless for you and enjoyable. Yeah. what are the most common mistakes that first-time home buyers make, and how can you avoid these mistakes? First and foremost, most first-time home buyers skip the pre-approval process. I don't really know why. Maybe they're not even aware that they need to be pre-approved first before venturing out to start going to open houses. What is a pre-approval? A pre-approval is a process whereby a professional will assess your liabilities and compare to your income. And they would come up with the maximum amount that you would qualify for when it comes to a mortgage. This is a very important step because for several reasons. One, it helps you to understand your financial boundaries. And in my case, as I would expect most experts, even when you approve people, you still have to give caution that because we're approving you for a certain amount does not mean that you should go out and blow that entire amount. So there are other things that are involved even when you go through a pre-approval. So can you go to the next slide, please? So it's important because you then don't waste time on homes that do not fit within your budget. Another thing you need to understand is that sellers they tend to prioritize people who are already pre-approved. If you're not pre-approved and you're falling in love with a property, the person who is already pre-approved will get more attention from the seller than you would because they would just believe that you are not serious yet. You also could lock in, or there are two ways that we can look at it here. You could lock in a lower rate if you do a pre-approval before you find a property, because as a lender, we will give you a guaranteed rate for a period of, it depends on who is lending, 90 days or 120 days. And you may end up with a lower rate. However, if you wait till the last minute, you're going to get the market rate. So the market rate could be the pre-approval rate that you initially got, or it could be higher than that. So when you get pre-approved, you stand a higher chance of getting a lower rate. It's not always the case, but the chances are there that you could take advantage of.
I do find that many home buyers do begin the process without necessarily having a plan in place, right? And as Shola mentioned earlier, oftentimes begin with touring open houses to get a sense of the market. What they don't necessarily recognize is that the actual agent who's hosting that open house often represents the seller. And anything that you say or do will actually be used against you at the negotiation table. I've had scenarios where buyers tell me what they're prepared to pay for the property, what their motivations are, right? When you're at an open house, really, you want to take that opportunity to ask questions, right? Keep your motivations and things that are important for you to yourself as much as possible. Now, in today's market, there are many properties that are well priced and well staged. And these properties tend to sell quickly. If you're ill prepared and you don't have an agent, who's going to write the offer? In some cases, I've seen the listing agent recommend an agent. Oftentimes, it's someone whom they have a close relationship with, and that can really, hurt a potential buyer, right? A first-time buyer, right? When it comes to, of course, making a decision, and that can end up costing someone tens of thousands of dollars. So before you even go to your first open houses, before you begin your search, here's my advice. First, Shola discussed already, get pre-approved, right? pre-approval is like, understanding how much funds you have in the bank before you actually go to the store, right? You want to make sure you understand that, right? The worst position that I've seen people in is that they've done everything required in order to get an accepted offer and unfortunately are unable to remove subjects because they couldn't secure their financing. So my advice to everyone who's on this Zoom is after this, schedule a consultation with Sola and work closely with your broker. Provide them all the documentation they require in order to make sure that you have your pre-approval and you have your financing secured in order to proceed. Now, just because you've qualified for $1 million mortgage does not mean that you can make that purchase of $1 million. There are additional costs associated, whether it be your taxes, property taxes, your closing costs, repairs, maintenance for the property. You really want to have a clear sense of these things prior to moving forward. And you want to make sure that the decision that you're making is based on data and facts and not necessarily how you feel emotionally, right? Sometimes buyers will make the decision, oh my God, I love this place, and make their decision based on that without necessarily considering how much value that property can appreciate over time. Right? And often I'll also see people make an emotional decision when they're choosing their realtors. We live in a city where the average person knows 2 to 3 agents. And oftentimes, both buyers and sellers, I see them choosing the agent that they're closest with, whether it be a family member or a friend. And sometimes that decision can have some significant ramifications. Not long ago, I was talking with an agent and they were frustrated. They were frustrated by the fact that they'd had a listing for over a year and they were unable to get an offer. And part of the reason of their frustration is that they had a full-time job and couldn't commit to the effort that was required in order to effectively market that property. The other challenge that they had was that the sellers were family members and they had a very difficult time having tough conversations with their aunt, which I can understand. I did get the opportunity to speak with the sellers as well. And of course, they were frustrated because the property had been on the market for a year and property values had come down in that time frame. And unfortunately, the reality was they couldn't fire their nephew. So I stepped in and co-listed the property, had the necessary conversations, and we were able to sell the property within a month. But the reality is that during that time frame, they lost over $1 million in equity. The relationship within the family is now fractured. So when choosing an agent, I advise to choose an agent that can provide you with the data, stats, so that way you can understand the market, someone who can invest the time and support you in accomplishing your goals, and also someone who will help you in defining your priorities. Buyer's remorse happens when we purchase a property that has the nice to haves, but not the must haves, not the actual features and functions that amplify your lifestyle. So when there are 16,000 active listings on the market, it is quite easy to feel overwhelmed. But when we know the criteria, we know what we're looking for, we have the right expectations, when we see the right property, we can act confidently and quickly.
Well, so another mistake is there are so many government programs out there that can help new home buyers or first-time home buyers that you may not be aware of. So when you talk to a professional, we're able to guide you and even recommend programs that you may not be aware of. These programs would help you towards your down payment. There are government grants, there are tax credits, there are low down payment options for you. Do not be scared. of mortgage default insurance. A lot of first-time home buyers, they hear the insurance thing and they want to shy away from it. Do not be scared of mortgage default insurance. It's there to help you become a homeowner sooner than later. The government, when you have RSP in savings, you can access up to $60,000 of your RSP and use that towards your down payment. If there is two of you and both of you are first-time home buyers, that's $120,000, up to $120,000 that you can access towards your down payment. You need to pay the RSP back, but it's tax-free. And you have 15 years to pay it back. You also have the tax-free savings account, which you can use towards your down payment. There's the first home savings account, which you have you can save tax-free from your income, $8,000 a year. And you have access to to participate in the FHSA program for about 5 years. That's a total of $40,000. You can combine all this money if you have some money. You don't have to wait till you have saved $40,000. You can combine your TFSA, your FHSA, and RSP towards your down payment. If you have all the savings, instead of you beating yourself up to save another money in your savings account for down payment, you can access your investment. There are so many ways for you to raise down payment, and the government allows you to do this. There is also the GST rebate on new construction, where you don't pay GST if it's a new construction up to $1.5 million property. You also have the property transfer tax. If you're buying a property that's less than $835,000, you get a property transfer tax break of about $8,000. It's okay if your property is higher, you're just getting a break of $8,000, and then the remaining amount will be prorated on the excess amount on 835,000. So do not be misled, because our friends, our family members, they love us, but they are not the professionals at this. They do, out of love, have a tendency of misleading you when they provide wrong information and you believe and trust them. It's important to always consult with a professional first. Yes, you might delay home ownership when you're not taking advantage of the programs that the government has for you. They have made them for first-time home buyers. And when you buy a property, the next tax year, you also get a $1,500 tax credit. The government loves you. That's what I'm trying to say. So you want to partner with a broker that understands you. We're able to assess your financial situation and put you on the right path. Work with you to help you achieve your goal in a seamless and enjoyable manner.
We've mentioned earlier there are additional costs associated with home ownership, and you want to make sure you have a clear understanding of these costs prior to taking action. One important thing to consider is the inspection, regardless of the age of the property, even new construction. I advise all of my clients to get that inspection. The inspection is between $500 to $1,000 on average. However, even on a new construction property we looked at a couple of weeks ago, we found a leak coming from one of the bathrooms. Could you imagine moving into your new home, ready to take a hot shower, and then finding out that there's a leak in the living room? The inspection will give you the current condition of the home and give you the opportunity to recognize red flags, whether that be to, of course, make sure those repairs are taken care of, or whether or not you want to proceed with the transaction. You also want to make sure you understand that if you're buying into a strata, so whether that is a townhome or a condo, that you're not just buying that unit, you're buying within the community. So, you want to make sure you read the strata minutes, that you understand the strata's current financial position. You read the depreciation reports. So this way, you understand what sort of maintenance may be required for the property. Because if there is a strata that's in a negative or a poor financial position, what that means is that whenever there's any maintenance required, maybe they need a new roof, maybe there's new piping, that's going to result in a special levy. And a $10,000 to $15,000 expense can completely derail a budget. And in the worst condition, force someone to actually have to sell the home. So my advice to all my clients is to make sure that they read all the documents, especially the depreciation report, because that will allow you to forecast and prepare. So this way, you can decide whether or not you can manage a $15,000 levy, in 3 years from now, and of course save accordingly, right? Or choose whether or not, this may not be the right investment for us right now. Right? Understanding all the costs associated with the property are going to be imperative. And in regards to closing costs, I advise clients to put budget for an additional 1.5% of the home's purchase price. During the initial consultation, I'll go over a detailed breakdown. So this way, we know early in the process what to expect. And as you're house hunting, you may realize that many homes are overpriced. Part of that has to do with sellers' expectations being greater than the market. In some cases, sellers want buyers to pay for all the repairs and all the maintenance that required for that property, and that may or may not be realistic. But there are also properties you'll find in the market that are priced below market value. In reality, the seller has zero intention of selling below market value. What they're doing is they're trying to drive traffic to the property so that way they can get multiple offers, create a bidding war, and then increase the actual final sales price. This can cause a tremendous amount of frustration if you don't understand market value. So, we do our best to educate clients and make sure they understand how to assess market value, not just by looking at active listings, but also to take a look at recent sales in the neighborhood, looking at properties that are very similar and assessing the cost per square foot, judging how much time the property's been on the market in comparison to others. If you see a property has been on the market for an extended period of time, that is often an indication may be overpriced. If you're seeing multiple price drops, that is an indication that the seller may be more open to negotiate. So looking at all these factors allows us to really make the decision based on data more than anything else. And in some cases as well, I've seen people get so caught up in winning in multiple offers that they don't consider the final implications or financial implications of their decisions. Right? So really giving yourself the emotional latitude to take a step back and look at that nice to have versus must have checklist and ensuring this is the right property, ensuring that you don't end up overpaying due to the excitement of the process is so critical, because there is a certain sense of, we say, finality when you're making that decision, right? It's not easy to take a step back, right? I had a situation not too long ago where I was talking with a potential client. They had purchased their property about a year ago with another agent, and they were not satisfied. They, for lack of better words, they hated their property. And part of that had to do with the fact that they felt pressured in that position and didn't realize that the property backed onto a main road and there was a tremendous amount of noise, especially in the evenings. And they actually can't sleep in their master bedroom. Now, to resell that home, they would then have to pay a flipping tax. They would have to pay a capital gains tax if there were any capital gains. The reality is the market has shifted, and so they would likely be selling at a loss. And then also have to pay realtor commissions. All in all, you're looking about $100,000 in losses to resell that property. So, I share this because I want to make sure that anyone who is looking to make the investment in real estate, that they're making sure that that investment is, of course, be sound, right? You're working with experts to assist you in making that decision. You're keeping your budget in line, right? And then, of course, right, you're making sure that you're buying the property that's not only going to appreciate but enhance your lifestyle. Now, I know I probably we shared quite a bit today, right? But I'd love to open this up for questions. If you have questions about the pre-approval process, mortgage rate, or are curious to learn more about the home buying process, I encourage you to schedule a consultation with us. We'll be more than happy to answer your questions.